Uh, Good evening, everybody. Today is not a very good day for the markets, and for the last few days, we have been seeing markets getting hammered every day. Uh, so today, again, we have Mr. Prasad Sawant with us to help us in strategizing for short-term trade and also advise us on how to position your investment in the long term. Prasad, over to you.
Good evening, everyone. Most of us are not happy with the markets today, but this is the we some days we get very good profit, some day very good upside movement, and some days are when there are certain situations called war and all geopolitical worries are there. So uh, on that front, most of the time we will find that markets are not doing good. So today we have seen big carnage. Early morning, Nifty was down by down more than 400 points, then recovered a bit. Then again, in last 1 hour, we have seen so much of volatility that it went down by 500 points and then again recovered 200 points and at the end closed down by some 350 points odd. So this is the volatile market, and this would happen when there are certain geopolitical tensions across the globe are there, and most of the time you would find that India VIX, which is the volatile index, is going to have higher. Like today, we have seen it was closed up 5%, and we have seen that it is almost reaching the 50-week high of 34. So when volatility index is at such higher levels, you have to accept that the volatility would be there, and most of the time your stocks are not going to do good. Uh, and if at all you are there trading into index, that is Nifty, Bank Nifty, and other index like Fin Nifty is there. So if you're trading into it, most of the time your stop loss is going to hit, and after that the target is also going to hit. So at in certain situations, you need to stay away from the market, or else just do what you can just follow the discipline of keeping stop losses, six stop losses, and also booking profits at certain levels. So this is what you can do in current situation.
Could you give a little specific on how one should trade the Nifty and Bank Nifty, like levels, and also that people are at least aware what are the next support and resistance levels that are going to work?
Right. So today Nifty, if you talk about the chart, then it was gap down opening today, and Nifty couldn't sustain at higher levels. It went down and again recovered a bit. So next stop is somewhere around 16th. Today we are trading at the level of July. On 29th July, the closing was 15,778, and today's closing is 15,863. So now the next support comes to somewhere around 15,500 and then 15,200. So these are the levels we can see that market should take some support. And if at all on upside, if we talk, then 16,000 is the first hurdle, and then 16,175. So between these levels, you may find market to trade in next few days, and after that, once any of these levels gets break, we may see upside or downside. As far as this option data is suggesting, like there are more calls short by the institutional traders than the puts. So better to stay away from the market for some time. And if you're trading, then if you're trading into index, then keep six stop losses. The as like I've given the levels 15,500 on lower side and 16,100 on upper side. For Bank Nifty, the levels would be somewhere around. Just a second. So Bank Nifty is going to be more volatile than Nifty, and avoid trade with higher quantity. As of now, it is trading today's Bank Nifty spot closing is 32,871, which is the lowest of or lowest in almost a year, right? So this the next support for Bank Nifty is somewhere around 31,970, right? So again 300 points from here, and upside is restricted to 32,087 32,000 32,950. So upside is very limited of say another 50 points or another 100 points only. But downside, again, I'm telling you that it is going to be very difficult for Bank Nifty to sustain at current levels, and we need to focus on sector specific action only.
Okay, you mentioned sector specific. Can you
Yeah.
explain a bit about which sectors are looking promising or dangerous?
Yeah, so India always gets into such situation when there is higher crude prices. So we have seen crude prices touching almost 12-year high, 14-year high. In 2008 July, it hit the lifetime high of $147 per barrel. Today, it was up to $140 per barrel, and most of the big brokerage houses like JP Morgan and all, they are expecting that it would touch 180 and $200 per barrel as well. So which is going to be a worrying situation for India, because our import bill is going to raise according to that, and this is going to be like a big concern for us, wherein inflation rates are going to rise, and overall economy is going to hurt by that. In such situation, where crude is at 14-year high, then rupees depreciating in this context, you can go for this oil and gas companies, wherein ONGC, then Oil India, and in IT you can look out for large cap stocks like TCS, Infosys, and in mid cap LTI, that is L&T Infotech, and Tech Mahindra. So these are the stocks you can look in specific sectors. Other than that, we are not that much bullish on other the economy facing stocks like auto, then infra, cement. These are going to be big, like they are going to have higher impact of higher crude prices, wherein their cost of manufacturing is going to raise. So please avoid all these sectors and get into stocks or sectors wherein we are finding higher value in near term. And this would be for next 10 to 15 days.
Okay. Prasad, we should give a disclaimer. These are our house views, and all decisions investors should do are based on their own.
Absolutely. So the disclaimer is there. These are not house views, and this is as per the current situation in the market. We are giving these specific sectors wherein you can look out for short-term opportunities with strict stop loss. As per
And
your
for
comfort.
stock-specific predictions, you can connect with IIFL Securities, and our research team will be able to provide you.
Absolutely. So our email ID is research@ifl.com. You can definitely mail us, and accordingly you will get the answers on your queries on related to the stocks and sectors.
Okay, viewers. Also, Prasad will be providing us with multiple diversification opportunities in the current volatile situation, through which you will be able to protect your portfolio and also see growth in it through proper diversification. So in the next few episodes, we will be talking about various baskets of diversification that IIFL Securities offers, and Prasad will help us with that.
Yeah, so in our last video, we spoke about these model portfolios. Similarly, we have portfolios of well-known industry fund managers with us as well, wherein Mr. Sunil Singhania's Abacus Smart FlexiCap is there. Then Mr. Shailendra Kumar's, who is into Nanolia Investment Managers, their two portfolios are there. And Mr. Pankaj Murarka, who was ex-CEO of Axis Mutual Fund, his portfolio is also there. So all these portfolios are focus portfolios, and these are going to help you to beat the benchmark returns, along with in near term it will help you to minimize your risk, because these are being managed by the well-known industry veterans who are going to keep in mind that they have to give good returns to the clients, so that the overall overall retail investors are not going to hurt their returns, as well as they are not going to get they're going to get good stocks at good valuation.
Great, Prasad. We will be talking about these in detail in the next few
Right.
episodes.
Absolutely.
Thank you for joining, and thanks viewers for watching this. We'll see you soon.
Thank you very much. Bye.
Bye.